People always say, oh, no, we rent apartments. No, we don't. We sell time. That is what our job is. We sell time. But what's unfortunate about our product is it expires every day. So for every day I don't have someone in that unit, I can never get that money back. Most of our rent increases happen between March and they are done by the end of August because I don't want to giving people September, October rent increases and they're moving out in the winter months or try to rent an apartment in December. Oh, here, it doesn't work out well. So, we're always looking ahead and forecasting, but it's interesting that people, this is a business where time is truly of the essence.
Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
Hey everyone, welcome to the Real Estate Pros Podcast. I'm your host, Micah Johnson, and today I'm joined by David, who's been making serious moves in the commercial real estate industry for quite some time now. David, welcome in, man. Glad to have you.
Thank you. Thanks for having me.
I'm excited for you to be here. I think our listeners are really going to take away some value, especially where we were discussing pre-call. Due to how long you've been doing this, you have a big reservoir of experience to pull from, and I'm excited to dive in on that. So for people who may not know you yet, what's your main focus right now, and what markets are you operating in?
So right now, Wisconsin, all over the state. There's not one region I'm not in. I'm scattered across the state with a little over 3,000 apartment units. Currently, I have 600 units, either actually out of the ground already being built, or in where I own the land and we're in pre-development right now. Commercial space, I don't mind. I own quite a bit. I don't mind mixed use. I steer away, I've dove into storage units and things once, and you know what? You need to stay focused. Or for myself, I do habitational multifamily and I'll do mixed use with that, which is where I get a lot of my commercial, and that's it. Stay focused. That's kind of how I roll. But
how important has that been? I want to pause right there on that topic, because it does touch on something. It's pretty easy actually to lose focus in real estate. There's so many things that you can do. How important has that been to your career to maintain that focus?
It is 100%. I mean, I've gotten into hotels, restaurants, you name it. And I always I'm always like, okay, what am I doing? I've looked at car washes. I'm like, no. It's funny. My bankers always say the same thing: Dave, you're good at what you do. Stay with what you do. And it's true. I've done okay in all those other things, but it's not my focus. It takes away from what my real focus is. So I've shed all of it. We've sold our boutique hotels. We are strictly still in apartments, and that's our main focus. But I just bought a building, 39 units, that has 47,000 square feet of commercial space with it. We have hundreds of thousands of square feet of commercial space, so we're very well versed in it. I know what we're doing, so I don't mind those deals, where some of the habitational multifamily investors and owners don't, because they're like, wait a minute, we don't know anything about commercial. But I do, so I'm not afraid of those deals, and I do quite well on them. In fact, when I underwrite on those properties, those mixed-use properties, I give very little weight to that commercial space, very little weight. Very little of the income do I count. And if it still is sustainable just on the apartments, that's my real target. And I've done quite well with that, because even if on the 47,000 square feet I took over, 19,000 of it has been vacant since It was built in 2015 and 2017. It is just
Wow.
gray box, and I've leased all but 4,000 square feet in the last 8 months.
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
They're doing the build outs right now with long-term leases. And it took me, 8 months to get them full and all the permits for them to start building. And the people that owned it, a huge corporation, she's one of the richest people. She's the 94th richest person in the United States. That's who I purchased the property from. And they have a huge staff, and they couldn't get it done. But our little company did and got it filled. So I look at that as icing on the cake. So I don't mind those deals.
For sure. Well, heck
And
yeah, man. Got to.
I've done it, on 4 or 5 projects and been really happy with the results. So
I like your approach about how you know how to do commercial, you're versed in it, but using the thing you're really good at to pencil the deal, where that other part, if it doesn't have to factor, now you're just talking about the icing on the cake. Like being that disciplined to do that.
yeah,
How has that helped you in your career overall to like just maintain that?
it's how we stay in business. I'm at my stage of the game. I'm not a huge risk taker. I mean, of course, there's risk in everything we do. I'm building 600 units right now. There's risk there, but it's very mitigated and very managed risk. So if the deal pencils on the apartments, I'm in. Even if it breaks even, then I know I'm getting, and I've looked at it and said, okay, I know I'm getting rent increases, right away. And I know I have some of this leased, which is nice. And if I can get this other leased, it's great. And it's working out. I'm down to less than 4,000 square feet that I need to lease. So I'm one space left, and I'm very happy with it.
Nice. Nice. No, that's excellent. So over your career, what I'm listening to is just how you've maintained to, one, stay focused, but also keep growing. For an investor that's listening that is seeking to just get that generational wealth like you're building, to really change their just the perspective we were talking about beforehand, a lot of folks, they're getting stuck up front when they really want to be getting generational wealth with a bunch of duplexes, things like that. So what you said, you started with a duplex 32 years ago and got to here. What was that like? How was the journey of that led you to where you are today?
I mean, I did get some lucky breaks. I was buying more inner city type duplexes, things like that, and doing okay, but working a day job. I got to a point where that wasn't working anymore. Took a job bartending at night, worked my properties by day. When I say worked them, I mean, I painted them, I cleaned them, I moved the residents in and out. I did it all. Then I started selling blocks of those, like 5 or 7 of those duplexes and singles at a time, and rolling those into inner city apartment buildings, 48 units, 60 units, 50 units. And I was buying them back in the day at like $8,500 a door. And again, just maintaining them, not rehabbing them, not letting them deteriorate, just just maintaining them. And as time rose, this was early 2000s, the value of those rose. I happened to meet a gentleman in Wisconsin, very big developer, very big landlord. And we kind of hit it off. And he was kind of impressed with what I was doing in those tougher areas to grow. I had probably at that time maybe 300 units in those areas and still managing them. And, it's difficult management. So he'd buy 400 units from a company and be like, hey, I don't want this 78 unit, Dave, why don't you buy this? Here's the price. Here's the closing. Call Ed Russell at this bank. He'll get you rehab money. We'll get this all set up. So I learned a lot from him about how to dress them up and create value in the units to be able to raise the rents, which again creates the value in the property. And they did a lot of trading up. And then in about 2004, he was building 100 unit plus complexes. And he said, hey, why don't you start buying these? I'll take this and trade, this and trade, and this trade. And that really worked out nicely. Now we've got the economies of scale. You've got synergy, economies of scale. Back then, you had a model unit, you had a manager, you had a full-time maintenance tech. It worked out really nice. And then I just took that and replicated it through, and I would still do business opportunity stuff that was built in the 60s and 70s that needed to be rehabbed. I did it. We came in there, we'd redo a 70 unit in about 12 to 14 months, every unit. Appliances, cabinets, flooring, light fixtures, windows, doors, the whole thing, millwork package, which again really created value because then we're able to raise rents $300 to $400 to $500, which really creates value. And a lot of those I still own to this day. I only sell if there's a reason to sell. If I've got smaller stuff, so I'm doing a deal right now. I'm going to start construction, hopefully in the fall. We'll start moving dirt midsummer, probably start pouring the first footings and foundations by late fall so we can build over the winter. But that project is 288 units.
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency. It's the most sophisticated, data-driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
I've already set it up that once I've reached a value of, I've got two smaller apartment buildings, a 24 unit and a 63 unit, that I will 1031 those into that property once I have the value established up to what the value of those are, so I can do a 1031. Now, there's a whole process to do this with, which we won't get into, but so I'll sell those because I'll take those equity and roll it in there. One of the other things with construction now, I don't do anything without TIF money. So I've got 600 units in various stages of construction, all of them done with tax incremental financing, plus my cash I put in.
Gotcha.
But that's a big part of what I do right now. And right now, it is better for me to build than buy. With where the market is, I'm building soft costs, land costs, soft costs, and the actual construction costs for private entrances, attached garages, solid surface countertops, and stainless steel appliances. I'm all in for about $180 a door, $180,000 a door.
Okay.
The last apartment building I bought 7 months ago, I paid $183 a door. It was built in 2017, mid-rise, 8-story. And it's new construction. So again, my upfront maintenance cost, plus then on top of that, when I deduct off the TIF money, I got $2 million on that deal in TIF, which I haven't even started receiving yet. It's a pay as I go. So once it's stabilized in about August, next January, once I pay my property taxes, I'll start getting back. It's an 8.5-year payback to get me my $8 million.
Oh, man.
But take $8 million, divide it into, $2 million into 128 units, I'm down into the 160s a door, all in, which makes sense. And what that allows me to do, so I'm not such a bad guy, it allows me to keep the market rent a little bit more affordable. I don't do affordable housing, but I don't want to be at the top of the market. I've got new construction all around me, and if I can be $150 less, than the project 4 miles down the road, I'm all good. I'm still making an 8 to 14% cash on cash return. I'm good. So it's kind of some of the things I look at when I am going to, purchase or build. But right now, it makes more sense to build. Now, that doesn't mean I haven't purchased. I purchased a little over 200 units this year. Well, not this year, last year, 2025. In actually more than that, because I bought cast iron. So almost 129, 111, and a 93 unit. So someone do the math. But that's what I purchased this last year. And they worked out. Now, they worked out because they were quirky deals. Each one of them had its own nuance that turned off other buyers. And it wasn't financial. One was part of a condo association. They weren't individual condos, but the apartment block of it itself, the 93 unit apartments, were considered one condominium in this project of 6 condominiums. And a lot of people couldn't wrap their arms around that. Well, I used to develop condos. When people think of condos, they think of an apartment. What a condo is, it's a different form of ownership. That's what a true definition of a condominium is. You can condo land, you can condo, if you have the right zoning, you can condo anything. You can condo an apartment building, you can condo a commercial building. It's just different form of ownership. So a lot of investors couldn't get their arms around it. They couldn't understand how this worked. And it took me and my team about 90 days to dive through the due diligence, read it, and it was a screaming deal. It was amazing. And then the other thing when I do things like that is we usually come in and get all the votes and take over the condo association. So I also manage that, or my company does. But
Gotcha.
yeah, and
Because
that's
that's
where it goes.
another part of what you do, right? Is it's you, along with building all the units that you have, you also self-manage them, correct?
Yes, yes. I've got a team of about 80 full-time employees, team members that do an amazing job. That I mean, that's everything from maintenance techs to, my typical leasing agent leases 300 or runs 300 units. They can be different, buildings, 100 unit complexes within about a 15-minute drive of each. But our average manager slash leasing agent does 300 units. Maintenance techs, we're pretty straight on the 1 per 100. And once we get to a geographical area where I have over 300, I add one extra person. So I'll have
Gotcha.
4 people for 300 doors. I phased out of landscaping. We don't do our own land or, grass anymore because even at $30 an hour to find someone reliable to sit on a tractor, 3 days a week was impossible for a while. So I think about 7 years now where we take care of no lawn.
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
But what I do control in Wisconsin is snow. It's one of the most expensive ice and snow control expenses we have outside of regular maintenance. And that is it's still cost beneficial to control that. So we run all our own equipment, trucks, plows, front end loaders, because that we probably pay for our equipment. A new truck. I just bought 2 new trucks, $120,000 for 2 new plow trucks. This winter already we're paying for them, but on a typical 3-year payback on that machinery. And who does it? Our maintenance staff. So I'm not hiring out extra people. We're just buying the equipment, and I get about a 3-year payback on that. And then once it's paid for, or I've got my money back from that, it's all icing on the cake. We keep a truck. We try to keep them 12 to 15 years, a piece of equipment. So it's it's definitely stacked in our favor, doing ice and snow. And that's why I've retained that within our company. Everything else on the landscaping, bush trimming, grass cutting, we farm out because you can get that, in Wisconsin, we have 27 cuts a year. I can get a price for that. I know how much it's going to cost them to trim my bushes twice a year. Snow, we have no idea. When we get to snow and ice control, we have no idea what it's going to cost. But now I can really control my costs, which is very important.
And that's been the theme through all the story that you've told so far that I really appreciate, even down to how you said it lets you be the good guy and get rents lower, is how much you're controlling costs, paying attention to what's going where so that you know that in what your in line is going to be each time. And that's a serious level of dedication to do that.
That is my job as running the company, is to fix problems for my team members and do whatever I can to control costs. So we just finished our we're on a calendar year. Our controller just pulled all the reports for our large vendors of what we spent with each one, our carpeting companies, our painting companies, our Cintas, our fire companies. And we're setting up meetings now where they come into our office. I give them what we spent with them last year. And I said, how are you going to save me more money than you did this year? And, and let them, if you value our account, what are you going to do for us? This is what I spent with last year. How can we reduce this? How can we, or keep it the same, or whatever it is? And I let them do the work, and say, if you can't do it, we're going to shop you. We're going to go here, we're going to go there. And, with the amount of units I have now, and you're spending with Cintas, we're spending over $500,000 a year, just for
exactly.
a fire safety. It's like, okay, what value are you going to bring me? I don't want to see a 12% increase. I want to see no increase, or how can you save me money? And I put the ball in their court.
And
so
that is the value of once you get to a certain size, you can swing that hammer more, where you can say, hey, look, you're either going to do this or you're not going to do this. And if you don't do it, no skin off my back. I can go call other people. And
Yes.
that's a strong position to be in.
But took 32 years to get there. But even with, we're talking with small investors, they can do that to a certain extent, because again, small investors become bigger investors and you want to work with the companies and the reps that work with you. So
Right.
that's really important. But we're always shopping. We're always quoting. We're always shopping. Right now we're in the middle of requoting all of our lawn services because those contracts start to get signed in March. Now we're requoting. Not only are we having the companies we work with requote it, we're always going out to new vendors, always looking for vendors, always looking for painting vendors, always looking. We never say, oh no, that's our guy. We're always looking for new. And vendors fall out. I used the same roofing company for 3 years. They were amazing for 3 years. They went down the tubes. It's horrible now. And thank God we had several other smaller vendors we used, which have now become our primary because we're always cultivating vendors.
I think that's a super valuable point because it's easy not to build redundancy in key positions. It's very simple. You can feel like, oh, I got the guy, like you just said, but having options is everything. If you're not building a redundancy there, you're going to find yourself in a really tight spot at some point.
Yeah, and that's so true. And then all of a sudden you're like, oh my God, this company went out of business, so they're doing crappy work. We've got 8 apartments that need to be painted. Who are we going to use?
Yeah.
And that's the other thing is, in painting, because we're spread out over the state, we have different vendors, but I can have one go to, hey, I know you don't do this property, but we lost our vendor here. Can you go here? But we're always cultivating vendors. That's one of the biggest things. I have 3 asset managers. So they manage the team out in the field. So that's their job. Each of them, runs about 11 to 1,250 units. Okay. That's their job. And they run the teams that run it from the managers, leasing agents, maintenance techs. That's their job to run those. So we have a meeting every Wednesday at the corporate office. They're all in there. I still look at every rent roll from every single property delinquency every single Wednesday. I look at my vacancy rates every single Wednesday. It's about a 4-hour meeting. We tackle all those first. I hear from every asset manager. They have to have updates on if they haven't paid, why not? Where are they being evicted? And because, getting back to, I started out in sales back in the day, and there was a saying in sales. You can have the best product everywhere. You can have the best factory. You can have the best everything, but nothing can really happen until someone sells something. And, just unlike a product, our product is time. People always say, oh no, we rent apartments. No, we don't. We sell time. That is what our job is. We sell time. But what's unfortunate about our product is it expires every day. So for every day I don't have someone in that unit, I can never get that money back. It's not like I can say, okay, well, that apartment cost me $83 for the loss today. I can just add that to the rent and pick it up tomorrow. No, it's not like a product where I can just raise the price of it and sell it. Once that money's gone, we have one of the most interesting businesses. We can know on January 1 what the maximum amount of money we can make. If all things stay the same, we don't buy anything new or sell anything new, I can take my rent rolls with what the rents are now and say, this is the most money I can make growth this year. And then what our job is to keep all of it as much as possible through quicker turns, through not losing your tenant retention, and through controlling our costs. So it's an interesting thing. Most companies can't say, oh, this is what my sales are going to be this year. I can say it on my existing portfolio. I know what we do rent increases. We schedule, they start January 1, but we already know what we're raising rents. That's a kind of October, November exercise in our office. We've got that all scheduled, and they start rolling out in January. And really March is when we really push. Most of our rent increases happen between March, and they are done by the end of August, because I don't want to giving people September, October rent increases, and they're moving out in the winter months. Try to rent an apartment in December. Here, it doesn't work out well. So, we're always looking ahead and forecasting, but it's interesting that this is a business where time is truly of the essence. We need to get the resident out. We need to turn that apartment quickly. We need to get a new resident in there that's paying us income. If we're taking 6 and 8 weeks to do a flip, heads will roll in my company. There's better be a really good reason. Like we had to gut the entire thing to the studs. We can do cabinets, and I can get cabinets in and out in 72 hours. They can be measured over to our cabinet guy. They're all in stock up there. We have our own countertop shop. So we make our own countertops, put it in and reinstall,
And well, it's what you got to do at that level, because, like you said, you don't get it back. It's like an air in the airline industry. You can't sell that seat
That
once the
seat
doors
twice.
close and it takes off. Like,
It's
you
done.
can't do it. It's over now.
Exactly.
I
Exactly.
remember I was at a conference listening to Jeff Hoffman, the owner of Priceline, talk about that very thing, like about how there's certain industries where time is what you're doing. That's what you're
That's what we're
actually
selling is
selling.
time. Yep.
Yep.
That's what we're selling is time. And
That-
and that's one of the important things for your listeners to understand is what's our real business? We're selling time. And once you break it down to that, a lot of things really come into focus. You're like, oh, that truly is what I'm doing. I'm selling time. People talk about, it's interesting. The appreciation on property to me is just like icing on the cake. That's not why I'm buying the property. Everything goes up, but sometimes it goes up more, sometimes it goes less. We try to use the rule of thumb of 3% a year. Okay, I'm not really worried about the appreciation. It'll come. And whatever that number is, it comes. What I'm looking at is cash flow. And then when I'm done looking at cash flow, I'm looking at cash flow again. That's what I care about because that's what pays the bills. That's what gives me the investment money. I shouldn't say never, but very few times have I ever refinanced a property and pulled cash out to continue to grow. I very few. Um,
Mm,
I can count on a hand one or two times. I'll do a 1031. I'll sell and roll all that equity into a much bigger project. I'll take a $3 million apartment building where I have $2 million in equity and I'll roll that into a $30 million project. That's fine, but never. I'm just not big on pulling cash out. Um,
right.
like
Well,
it's
and that
paid
that
down.
goes back to what we were talking about at the beginning and how we're, just tying it up. Know what you're doing. Know your lane. Understand what it is you're trying to do. What are you actually trying to accomplish? And then what lines up with accomplishing that? Whatever
Yes,
doesn't, don't do it. Right?
finding
Just
your
get it out of the
goals.
way.
Owning 14 duplexes, you're not going to grow wealthy. You're going to run yourself ragged. You're going to get discouraged and you're going to sell and get out. Anyone that's got 5 or 6 duplexes and wants to grow, or the new buzzword scale, you need to start putting a package together, selling it, and 1031 into a 20 unit, a 30 unit, whatever you can buy with those dollars. Now you've got economies of scale. You can start having a little bit of management help. And now you're building equity, you're paying down mortgage. And at the end of the day, now in 2 years, sell that and buy something. Or do as a lot of people do, which is there's no right or wrong. Refinance it, pull your cash out, go buy another deal. But don't overfinance it. If you put $1 million in, finance, if the property will sustain it, fine, pull your $1 million out. Start with that again. Oh, because look at it this way. Now you've pulled all your cash out of the deal. Now you're getting an infinite return. That's where ROE is a lot more than ROI. ROI, when we have our equity in it, that's what we're looking at. ROE is a different animal, and I'm not so concerned about it. I mean, I am sometimes, but not really. I mean, I've got properties now that I should probably sell or refinance cash out to go. But the other problem we know in this market is there's not a lot to buy. That's why I've switched to building. And what we are buying is expensive. I think the least expensive I paid was $139 a door. I think the most expensive this year I paid was $185 a door. But these are all new products within 10 years old, more class A, mid to high rises. But those happen to work out. But I just got some appraisals. I was doing some estate planning, got some appraisals on some of my properties, and I was even astonished at what the stuff was appraising at. Stuff I built 20 years ago that didn't cost me 50, 55 a door to build is appraising at 160 a door now. And I'm like, wow, it's a lot of money.
Stay in
A
it
lot of
long
money.
enough and it keeps working out. Like we talked about before, real estate is the best get rich slow scheme that's out there.
It is truly
Well,
it. If anyone's looking to buy a P. Diddy yacht and a plane and a Ferrari in the next 5 years, you're in the wrong business. I always tell people we are get rich slow, and it's not get rich, it's get wealthy. But at the end of the day, what do you end up with? You end up with a piece of paper with a big number on it, but you can't take that piece of paper to the grocery store and buy your Fritos with it. That's why cash flow is also so important, especially for an investor like me, where I don't do anything else. I don't have any other sources of income. I need to feed my family, live, and still have enough money to reinvest into properties and building and buying and keeping things going. And that's the other big message is You cannot be stagnant. Everyone's like, including my wife, why don't you slow down? There is no slowdown. You're either in or you're out because with the costs, our overhead costs, I pay for insurance now that we didn't even hear of 15 years ago. Like I have E&O insurance, errors and omissions. If there's a problem on a lease, I have discrimination insurance. So if one of my team members, unbeknownst to me, is discriminatory and they sue us, I have insurance for that. The amount of insurance, just the cost of insurance, we have had no losses in 5 years. And I got hit with a 24.9% increase a year ago, October. And then this October, I got hit with a 13% increase. So in, 13 months, I got huge increase, but the bottom line on that is I am still paying per 1,000 less than any other company out there. So we stuck with them, but they knew they could stick it to us because there was no place else to go.
Nowhere to
We
go.
know, and the 90% of my portfolio is under one policy with one company, and it's a great company. We've never had a problem with them, but that 24.9 equated to me was almost $300,000 increase in 1 year. And
Wow.
you have to be able to absorb that because I can't pass all of that in 1 year off to the residents. It couldn't happen.
Yeah. No, there's no way.
And in
So
taxes,
like,
yeah, like property
well,
taxes
just
this year.
go ahead.
Property taxes this year on my portfolio, the net cost to me with the increases, I had one property that a year ago went from 3 million to 4 million in assessment. This year it went from 4 million to 8 million in assessment. We always try to fight them, but we couldn't fight this one. There was nowhere to go with it. And overall, in Wisconsin, we got hit particularly hard because of some law changes that happened here with our governor. And a little over $300,000 subtracted from my bottom line this year in property tax increases and valuation changes. Huge, huge. Some we got to fight, some we couldn't.
And that's where, like you're saying, it's part of it. So for those out there that are listening, like the real estate journey doesn't really stop. As if you're staying in it that day to day, you're going to be dealing with different things all along the way, from where you started with the duplex to now with 3,000 units. Like that is the key. So David, man, I really appreciate your time today and your perspective. You dropped a lot of knowledge on us. Thank you so much for being here.
Thanks
So
for
for
having
those
me.
of
I
you
really
that
appreciate it.
Absolutely. For those of you that got value from the episode, please like this episode, subscribe to the podcast, share this around. Thank you for being with us. Again, David, thank you. And we'll see everybody on the next episode.
All right, take care.
Thanks for joining us for today's Real Estate Pros Show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing for your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. If you're interested in joining us as a guest of this show, please visit investorfuel.com/pros to apply. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe so you never miss another episode. Have a great day. We'll see you on the next show.